By the end of this section, you will understand what Forex trading is, you will understand how to trade the Forex market, you will understand that the Forex market moves just like any other market, you will learn the different types of orders used in Forex trading, you will learn how to place a trade on the Forex market, you will learn how you can earn money trading Forex, and you will understand how you can protect yourself should your trade not go your way. Now, Forex stands for foreign exchange, and the Forex market is the largest financial market with over $5.3 trillion traded daily. That is way larger than the stock market. Okay, the Forex market is extremely large and extremely liquid. The Forex market comprises of over 4,500 banks. Okay, so the Forex market is dominated by the banks. The banks dominate the Forex market, and currencies are traded through a broker or dealer and are traded in pairs. For example, we have the euro and the US dollar that is traded as the euro USD, and we have the British pound and the Japanese yen, which is traded as the GBP JPY. So currencies are traded in pairs. Now, the Forex market until 1995 was not accessible by small investors. So small investors, retail traders could not invest in the Forex market until way after 1995. The Forex market was only traded by large net worth investors and banks. Only banks and large net worth investors had access to the Forex market. Now, the 6 major currency pairs are the Euro USD, the GBP USD, USD Swiss franc, USD JPY, USD CAD, and Aussie USD. And if you're just starting out in Forex, it's best to start trading with these majors, okay? Because it's easier to focus on a small amount of currency pairs when you're just starting out in Forex. Now, one of the benefits of the Forex market is its deep liquidity. With Forex, you don't have to worry about liquidity. Whenever you place a trade on the Forex market, there will always be a buyer or a seller. If you're buying, there will always be a seller. If you're selling, there will always be a buyer. The Forex market is extremely liquid, and the Forex market gives you 24 hours a day trading opportunity, and you can trade from anywhere in the world. So these are just some of the advantages of Forex trading. You can trade from anywhere in the world. Now, let's say the US dollar is expected to weaken in value relative to the euro. A Forex trader in this situation will use his dollars to buy euros, okay? And if the euro strengthens, the purchasing power to buy dollars has now increased, and the trader can now use those euros to buy back more dollars than he had to begin with, making a profit. So this is the essence of Forex trading, okay? If we think a currency is going to strengthen in value, we are going to buy that currency. So in this example, the trader thought that the euro would strengthen in relationship to the US dollar, and it did. So this trader made money. That is what Forex trading is. If we think a currency will strengthen in relation to another currency, we will look to buy that currency. So in this case, the trader bought euros and the euro value increased and he made money.